What is up, family? Thank you guys so much for tuning in back into my channel. I just want to say thank you so much for your patience. I know it's been a very long time. I haven't posted in about 8 months, but I'd like to give you guys an overview of the trades I've taken from October the 30th all the way toward the first week of November. All right, let's start off the video with going over October the 30th. I'm going to let you guys know from the start, this was not a successful day. This was actually our first red day in the past 2 weeks previously. Now, you want to understand, whenever you guys have a strategy, it's very important that you guys stick to those rule sets, because in days like this, if you don't stick to your strategy, it shows. So I'm going to go very quickly on why exactly these losses were prevalent. The first trade that we took was exactly AMD 95 puts. This was a win, but it was very minuscule, except the next trade that I did take actually proceeded to take away the wins that I made and ended up turning me from a slightly green day to a slightly red day. So the first thing that we noticed, 95.44. First 5 minutes, you could see a support at that range. We break it initially, but I never like to take breakouts because there's always a chance that we could pull back and you're going to get a way better entrance. We got the nice little break. We got the nice little pullback back into that $95.44 level, and we have an intent of a seller actually showing that they're going to proceed to push the price even lower. So that was the reason why we initially entered into those AMD 95 puts at $367 a contract. We were able to close this down and trim it closer to $378 a contract, but overall, they did not want this to get any lower, so we actually closed out the rest of the trade for about a break-even price. We re-entered back into the trade, and that was my mistake. The reasoning why this did not work out was we saw a clear structure, more so of an inverse head and shoulders pattern that popped up. I didn't wait for a retest. I didn't see the proper execution of this trade, and I didn't notice that we are riding a trend to the high. And actually what ended up happening to this trade is where we entered in at that 94.97 price, they held it, they bounced it all the way above, and they pushed it back into that 95.70 spot, proceeding me to close out the trade, so I ended up closing it for a loss. But again, right, we want to make sure that one day does not ruin your week. You guys have to stick to the same principality. Shoot, I don't even put more than 25% of my account in one trade, so it allows me to be able to come back the next following days. So we were red the previous day. Let's see what exactly happened on October the 31st. On October the 31st, I know we took 2 trades that day, and they ended up becoming very good winners for us, and it allowed us to get the money back that we lost from the previous day. So on exactly SPY, 415 puts, 11.2, we took this on October the 31st. I'm going to explain to you guys why exactly we took these puts. And we like to stick to the same principles. First 5 minutes, we have a clear rejection of that 416.36. So we know at this current moment, that's the high of day. We got a nice little sell-off, right? We broke the demand of the 414.92 for a moment, but remember I told you guys, I don't like to take initial breakouts of any demand or any supply or any support or any resistance, because there's always a chance that we can get a pullback and get a better price. So what ended up happening was we broke the 414.92, and we ended up pushing all the way back to that high a day, that first 5 minute print. So when we look at that specific spot, I know, okay, it looks like they're holding the demand for a specific moment, but is there an entrance for me? And one way you can actually tell is by looking at the tailed rejections. And we like to call these tweezer tops. It's very clear here that 416.36 is still very troublesome for buyers. And we know from the intent that they engulfed that previous green candle, and the next candle, they proceed to push it below that candle's base. So we call that an engulfing trend, and that gave me a confirmation to continue and to actually want to go ahead and go short on this, allowing me to go into SPY 415 puts, filled at $261 a contract. Now, you could see, I like to give updates in the Discord. You can see the price of SPY start to get lower and lower and lower and lower, and I told everyone we want to get under the volume weighted average price and toward the low of the day. And we did that. Started to go closer and closer and closer. We're able to trim out the position all the way up to $287 a contract. But again, we're back at that 414.92 demand. I got a decision to make. I got to trim up to it. I got to trim at least 75% of my position, because I do not know if that 414.92 demand is going to hold. We can't plan those things, so you got to be able to manage your risk and start to take profit on the way. As you can see, it held. right? This is my visual confirmation to let me know I got to close it out, right? Because what's the chance that it retests back into that 416? And believe it or not, it did. So I was able to close out most of my contracts from a $261 entrance to $292 a contract because of that. Now, the second trade we took, this one is a lot of the same principalities. We like to mark the high and the low of the day, right? We want to see that nice reversal in price. I didn't see any support or resistance. I didn't see any supply or demand anywhere near here. But the first 5 minutes, we established the high of 125.40. We sold off into 123.61, and we see a clear bounce in support. And remember, I told you guys, we don't look for the breakouts. We look for a retest of a specific spot. We bounced 123.61, bounced it all the way through, closer toward the high of day. Proceeded to sell off, but as you could see here, we're consolidating at that 123.61. We don't have a clear break, but it's a clear consolidation. A lot of you pattern traders out there are going to say, okay, maybe this is a bearish consolidation. I thought the same. So I wanted to enter into these puts. 124 Ps expiring 11/3, $122 a contract. Bam, bam, bam. As you can see, it took some time, but we proceeded to sell down. We were able to push these contracts lower and lower and lower. We were able to hit the bottom of my demand zone at 122.71, and we were able to clear these contracts from exactly $122 a contract all the way up until I believe we sold this to about $150 peak contract gain. Amazing trade on that point as well too. We got our money back from the previous day. Let's go ahead and continue on into November 1st. This was a little bit of a harder day, but overall we're still able to make this into a green trade. I want to point out something very, common in all the trades I've taken this week. We're looking for these topping rejections or these bottoming supports. And in this point, we identified a clear supply at that 125.63 spot. You can see the first couple minutes of the market open, we kind of pushed up into that 125.63 spot. We sold down, held a base, retested back into that range. We like these types of setups because they allow us to know if we're going to see if there's a clear rejection or a little bit of a tweezer top pattern. That's going to let me know a little visual confirmation that sellers are still present at that range. I took the chance, entered in at that 125 put spot, and I made sure my price target wasn't going to be anywhere near underneath that volume weighted average price, and I wanted to make sure that we kept the 5-minute stop loss print above that 125.63 level. As you can see, it ended up consolidating a little bit. It was holding. It really retraced all the way back into that 125.63 spot. And I think this is a pretty common thing for a lot of new traders that get into this, is that they're going to enter into a trade and they're not going to have the confidence because they don't even know where their stop loss is going to be at. Make it very simple. If the reason why I entered in was a clear rejection of a supply, you want to make sure you stick to that thesis and put a nice little confirmation that says, hey, I entered on the 5-minute chart. I'm going to place a 5-minute stop loss above that range. It never broke that range, so I was able to stay into the trade. And even though it was still a small gain, right, we still were able to make some money, $103 a contract, all the way into that $117 peak. And obviously, we did enter into this trade. This is my proof that my proof of entrance, 5 contracts, $103 a contract, it was still worth it. You just want to make sure you stick to your plan and your thesis. And now let's move on into the fun part where the trades get progressively faster, and we are taking multiple trades November the 2nd. November the 2nd, I've been trading Google so much this week. It's been a common theme, but we've noticed there's just such good volume on this. That's why we decided to keep on trading it. Now, for Google, we entered into November the 10th contracts for $128 puts. Very much the same reasoning. We identified a pre-market high. We see obvious topping tails at that 128.72 pre-market high, and we want to take the chance because we know there's obvious selling there. Let's trade this at least into the support where we see obvious buying established at that 127.40 price. We like those. So we entered in 175 a contract, price target 127, and you could see we see these trades start to happen and they start to sell off. Look at the progression of this chart, of this actually moving down closer into our price target of 127. Look at that progress. We were able to scale out these contracts from $175 a contract all the way through a peak gain of about 205, 202. We like these types of trades. You want to know, okay, I see rejection, and we're at an obvious point where we see previous rejection, and look at the conviction of the sellers. You see how strong this wick sell-off is? You want to take trades like that. You don't want to be the person buying a breakout of underneath the moving average. No, that's going to get you into the trade late. Identify the pattern, enter in, and take the chance, and you're able to be rewarded with proper amounts of money. And by the time people are buying, you're already going to be selling. Guaranteed, there are going to be people here that enter into this pattern, and they're going to see then they're going to see this on the 1 minute chart and say, "Oh my gosh, it looks like a 1 minute bear flag." But wow, you entered in because you saw the clear rejection of that resistance. That's what you want to do. That's the discipline you want to instill in. And it was a great trade, right? Great trade overall on that point. Now let's take a look on the second trade that I took. This one was another trade that I took. Amazon 136 puts. This one is expiring at the same time, November the 10th. Filled at $179 a contract. Price target was going to be closer below the range. I want to see somewhere down into around 135. Stop 5-minute print above that 137.46 spot. And honestly, it didn't do that high. That was really the only losing trade that I had after that. And I think I closed this one out for about a small loss at about $150 a contract. It just hit above my stop. Couldn't hold it that long. And that's the problem again, right, guys? If you try to trade patterns, which is what exactly happened here, I try to trade a bear flag break. That's not always going to happen. There's always going to be a chance where they do a false breakout. You're trading against market makers. You want to trade with strength. If I wanted to take this Amazon position, it should have been the rejection of that 138.92 pre-market high. That's what I should have done. Instead of waiting for like an actual consolidation and trying to go short on that, that was not a good decision. You want to try to take trades that have higher conviction before anyone else is trying to take it. Last but not least, let's take a look at Friday, November 3rd. This one, we actually didn't take a loss to stay either, and I think I only took about one trade, but overall it was a good trade. Let me show you the setup on how we did it. So for November the 3rd, it's the same exact setup that I want to show you guys. Identify an obvious high, whether you do the pre-market, whether you do an establish of the early high a day. This was an obvious one, and this goes with adding our ideology of supply and demand. We identified a clear supply of 139.35, pre-market high, tailed rejections of this range, and we're clearly creating a little bit of a consolidation. I don't always want to take trades off of consolidation, but when you got a supply rejection, when you got a pre-market high rejection, and you got a consolidation break, and you got increasing volume, that's enough of a triple, quadruple confirmation for me to go short. Now on this one, our price target was 137.21. Stop 5-minute print above 139.17. A very clear trade for me to take. It looked like a very good idea. 173 entrance. Bam, bam, bam. As you can see the progression, it ended up breaking underneath, holding under the VWAP, the 20-day moving average, and it continued to sweep and sell off. We were able to scale these position out all the way to a peak gain of $206 a contract, and it actually went all the way through, and we trimmed down to a runner of $214 a contract. It hit my actual price target of 137.47. Again, I want to thank you guys for watching this video. I would like to let you guys know that we're currently running a 1-month free trial that ends on exactly November the 15th. So at this time of recording for exactly November the 5th, if you guys are interested in wanting to try out my group and wanting to trade with me, just like you saw in this video, come into the Discord, discord.gg/stacks, or link in this video description. Sign up link in the announcement section, enter in the code FREEFALL2023, and from there you should be able to join into my group where you'll be able to trade with over 300 VIP members in the community, and over 7 analysts as well too, not just me. So hopefully you guys learned something from this video. There's going to be more videos like this to come, and hopefully I get better at this, but there's going to be week-to-week videos to where we're going to explain this as well too. But again, thank you guys for your patience. Thank you guys for supporting me in this video. If you loved it, comment, like, subscribe, do what you got to do, and thank you guys for tuning in.